The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Matt Miller. We are kicking you off to the closing bell here in the U.S. Want to get a check first off on what's going on in terms of the markets on this day before the election. I have put the Dow Jones Industrial Average in here. Many younger people have called this index silly because it's price weighted, but I think it's fascinating today because we're seeing Nvidia replace Intel. We're also seeing Sherwin-Williams replace Dow, so there won't be a Dow in the Dow Jones Industrial Average. You can see it's off just about 0.5%, and the S&P right now is unchanged. The U.S. 10-year yield coming down by a lot, almost 8 basis points, still hasn't erased all of the gains that we put up here in terms of the yield on Friday. I still think it's pretty puzzling that the non-farm payrolls number came in at only 12,000, and yet investors were selling bonds and boosted the yield to 438. Right now we're at 431 on what some view as a recalculation of the Trump trade. Bitcoin certainly looks like a recalculation of the Trump trade. Today only down 2%, but at $67,743, we're $6,000 off the high level that we hit on Tuesday, which maybe was peak Trump win day. We'll see, obviously, tomorrow. And then NYMEX crude, right now up 3%. OPEC Plus delaying production increases amid fears of a glut. And you see the same thing with Brent, the global benchmark. So oil is one of the big movers to the upside today, Scarlett, on that drop in the dollar.
All right, so just to put some context around everything Matt was just telling us, the market action this election eve really reflects the dead heat presidential race, which is mixed. As Matt showed us, the S&P 500, little change. Most of big tech is lower on the day. Small caps are gaining. Bonds halting their sell-off for now while the dollar weakens overall. Meantime, you have Harris and Trump crisscrossing the country, making their final pitches to a sliver of undecided voters in battleground states. For everyone else, election fatigue looms as the final tally of votes may not be complete for days, making it impossible to call a race quickly if it is close. Matt?
Yeah, Romaine Bostick. I'm filling in for Romaine, by the way. You may have noticed that he's out today. He is in one of those swing states. He's in Michigan, where we go live right now in Detroit at the Huntington Place, a ballot counting station that just looks monstrous, Romaine. Really a huge building that looks like a very secure facility as well. Is this one of those places that has changed a lot since the last election?
It has changed in a big way, Matt. Back in 2020 on November 3rd, that election night, the conspiracy theorists got wind of, well, a conspiracy and descended on this very location, banging on the windows, demanding that they stop the steal, in their words. Election officials did not want a repeat of that here in 2024. So while they are still in the same facility, they did move to a windowless actual area here, this room. There are police all around me. There are metal detectors checking everyone in and out. And the election officials I spoke to today said there will not be a repeat of what we saw in 2020. They have actually been counting ballots for days behind me here, mostly the absentee ballots. Early voting ballots will start to come in early tomorrow. They will start counting those, and then they will count election day ballots. Election officials did say that they anticipate, at least here in Detroit City, that they will have those ballots counted, Matt, on Tuesday night. And we will know, at least for Detroit and possibly for Wayne County, the results here in this particular locale.
And Romaine, you've been in Michigan since the weekend. You had a chance to talk to different people. What are Michiganders telling you in terms of the issues they are most concerned about, especially when it comes to the economy?
Well, there are really three issues that are driving this election: immigration and abortion. We know that Trump has a leg up on immigration. Kamala Harris, in theory, has a leg up on reproductive rights. But number one at the top of the list is the economy. And the consensus out there right now, Scarlett, is there really is no consensus. I spent the past 24 to 36 hours really going all the way around the Detroit metropolitan area, from the inner city here in Detroit City over to Dearborn, a big Arab American and Muslim American enclave, to Grosse Pointe, one of the biggest, wealthiest enclaves that you have in this general area. And the consensus that I got from everyone here is right now they really do not know how they feel about the economy. Some people look at the Biden-Harris administration administrations and their stewardship of the economy, and they pat them on the back. Others are really longing for the boom times that they seem to have seen under the Trump administration. One thing is clear, though. They're not necessarily voting on whether they feel better now than they did 4 years ago. They're really voting on this idea as to whether their economic conditions will be better 4 years from now compared to where they are today. Scarlett.
Hey, Romaine, you are obviously in the automotive center of the United States, and that's changed a lot as well, right? There was a time when union workers would have voted for Democrats. The last couple of elections, they have gone for a Republican. You have this idea that the Biden administration and Democrats are pushing EVs on consumers, and we definitely have a disadvantage versus other countries, especially, for example, China, when it comes to producing low-cost, high-quality EVs. What are you hearing from auto workers?
Well, I had a chance to catch up with the Detroit Regional Chamber, and there's a huge political divide on this issue. Remember, manufacturing is a huge driver in this state, about 20% of GDP. Only 3 states have a larger concentration of manufacturing. But of course, we know those jobs have been dwindling. There's a lot of blame, finger pointing, if you will, at a lot of jobs moving overseas. And this has been a big issue for the candidates as they traveled here, both for Harris and for Trump and his surrogates. The political divide, though, is pretty great. A lot of the Republicans, they really do not see the need for the sort of massive investment that you're seeing in the EV space, while a lot of the Democratic voters want to see more of that. What they do agree on, both Republicans and Democrats, both urban and rural voters, is that they want to see more job training. They want to see more education, particularly when it comes to some of these high-tech fields, not just automotive manufacturing itself.
All right, Romaine, thank you so much. Great wrap up of what you're seeing out there in Michigan. Of course, we will be checking in with you in the next hour as well. Romaine Bostick on the road for us in the battleground state of Michigan. We want to turn back now to the markets, where it appears the Trump trade is fading. You look at Treasury yields, you look at the dollar, both are pulling back, although not as much as betting markets, where the odds of a Trump victory is now about 53% versus around 60% last week at this time. So for more, let's bring in Joe Mazzola. He is head of trading and derivatives strategist with Charles Schwab. Joe, good to speak with you. As we just showed, parts of the Trump trade appear to be fading, yet you look at DJT, the Trump media company, and that is up 14% on the day. Does the Trump trade deserve as much attention as it gets? Is it a real thing?
There's a lot of volatility to it. So, it's something to kind of keep an eye on. I think it's more of a trader market than it is kind of an investor market, if that's what you're looking at. It moves so quickly that it's difficult to invest in. And that's just kind of my opinion on it. We don't see a ton of it at Charles Schwab. It's not one of the heavily traded products, DJT, over here at Charles Schwab. What we tend to see more is a lot more of the AI. That's the space where our investors, really are on the buy side specifically.
Yeah, and of course, there's another AI-related company reporting earnings this afternoon, Palantir. Of the companies, and let's just stick with the Mag 7 for now, of the companies that have reported, we're only waiting for NVIDIA, but out of the 5 that reported last week, only 2 of them, Alphabet and Amazon, seem to impress the markets. How does that set us up for when NVIDIA inevitably reports?
Well, Scarlett, if you think of it this way, all 5 that reported, if you look at the average, they're showing 30% year-over-year growth or profit growth. That's phenomenal. But look, the bar is set high. I think that's where when you look at those stocks in particular and their monetization of AI, are they able to show that that's something that they're able to do? And I think at least for this quarter, Alphabet and Amazon were the 2 stocks that were able, to really display that through their earnings and through their guidance, more importantly. Going forward for NVIDIA, one thing was very constant among all the conversations is that there's not an expectation for them to curl that spending or curb that spending. If anything, it's going to increase. I think that helps NVIDIA. For NVIDIA, their biggest issue is supply chain. If they can keep up with the demand when they're clearly sold out of their 2025 Blackwell chips, they're in a good position right now.
Yeah, all the companies that reported also may have disappointed on earnings, but they wowed on CapEx, right?
True.
Microsoft spending, I think it was $16 billion in 1 quarter on real estate and equipment. Facebook wants to spend almost $100 billion in the year. I wonder what you think about the non-AI sectors, Joe. If you look back year to date, it's been phenomenal for every industry group. They're all up year to date, but real estate, energy, healthcare, they're lagging, right? Materials as well. You see any change for those? I mean, normally we would say the dogs, right? But they've got big green arrows next to them. Are they going to improve more? Do we get a broadening rotation?
Well, remember, Matt, I mean, real estate was doing okay spring through the summer, and then we got that big jump off the September jobs number where 10-year yield, basically rallied 50 basis points in a matter of a month, and that's where you really start to see that weakness. What's interesting to me is out of the sectors that you would think that would be leading the charge, you wouldn't expect utilities to be up there. And with utilities, 97% of the stocks that make up the utility sectors are trading above the 200-day moving average. A lot of that is an AI, kind of an ancillary AI play, if you will, as there's this need for more and more energy. But shockingly, that's one of the sectors that's done very well. When I look at kind of where we might see some of that investor money going forward, technology and communication services, those are the two sectors that have done the best so far in terms of their earnings beats. I think you'll probably see that story continue. But what's interesting is when you look at expectations for 2025, and this is where the Mag 7 and this is where technology as a whole comes in, the expectations for earnings are a rotation away from that and into some of the other sectors that you mentioned. I wouldn't be surprised to see discretionaries do well as long as the consumer, is able to kind of hold up through this economic expansion, or at least what we're looking at in terms of the economy holding up. If the consumer continue to spend, and discretionary should do well. We also are looking at potentials for healthcare outperforming as well too in the first quarter of 25.
Joe, what do you make of the backup in yields we've seen at a time when the Fed is, widely expected to continue cutting rates? We've seen the 10-year go from, I think, like 370 up to 430. So we're adding 60 basis points as we find out that the Fed's going to go from 5.5 to 3.5. Why does that make sense?
Well, so what's interesting is, like I said, when you looked at that big move, when did it really start to occur? It started to occur right after we got the September jobs data and that first week of October. And something, Matt, that I've been really keeping my eye on is the MOVE index. And basically it looks at the volatility of fixed income. And in the past, we've seen this relationship between kind of the MOVE index and the VIX, where, the move might start and then the VIX kind of catches up. Well, we haven't seen that yet. I mean, the VIX has basically been holding around that 19 to 22, 23 level, where the move is pushing up back to, where it was about a year ago. Something's got to give, right? Either you're going to see, bonds maybe start to rally and pull off some of that rate pressure that we've seen, or you might see the equities kind of roll over and see the VIX rally up to catch up with that, because I don't think we can live in this vacuum where you continue to see interest rates go up or bond yields go up without having an effect or negative effect on equities. We haven't seen it yet, but I think as we get closer to maybe that 4.4, maybe even 4.5 on the 10-year, if that happens, I think it would probably have a negative effect on equities, at least in the short term.
Joe, great intel. Thanks for joining us. Joe Mazzola there. He's the head of trading and derivatives at Charles Schwab. Now, turning to the auto sector, car buyers across the U.S., even those with high incomes, are being pushed out of the new car market by sky-high prices and forced to start shopping for used vehicles. Joining us now to discuss, someone who knows about this growing trend firsthand, George Kauffman. He's the owner and vice president of George Byers Sons, a dealership in Ohio that offers both new and used cars across a number of brands. George, great to have you on the program. Thanks so much for joining us. What have you seen? We've all noticed the very high prices, right? I bought a Raptor back in 2014 and it was $58,000. When I looked again in 2021, it was $85,000. So that's the kind of increase that we've seen really across vehicles. I think the average price now is just under 50 grand. What kind of trends have you noticed that pushing consumers to do?
So you're absolutely right, Matt. What's really happened is over the last, the average person is in their anywhere from third to fifth, sixth year of their current vehicle. So when they were in the market 3 to 5 years ago, the prices, the average price of a new vehicle was somewhere between $30,000 and $35,000. But now that they're coming back to the marketplace, that average cost of a new vehicle is, like you said, I think it's around $48,000 and some change. So that's a pretty drastic inflation cost that they're seeing, and it's really blowing some people's minds because they have seen all the other inflations happening with groceries and things like that. But the cost of new vehicles has really been a surprising thing for a lot of Americans.
I wonder about the financing costs as well, George. I was talking to a potential home buyer this morning who said she and her husband were really put off by the rate, especially not just the price of the asset, but how much it would cost to finance. And of course, most people buying a new vehicle are going to be financing that or leasing it. We haven't really seen the cost of financing come down too much, even as the Fed started cutting rates. How's that affecting your customers?
It's affecting them greatly. So the average rate for a new car buyer is a little over 7%. On a new vehicle, I think it's around 11% on pre-owned. And that's a huge jump from where they were a few years ago. The Fed has cut the rate once. They really are going to have to cut it, I think, 2 to 3, even 4 more times before that really trickles down to the new car buying experience, to see people really see it make a drastic change in what their monthly payment is.
George, I look at how much General Motors is making in net profit, and it's going to be $10.42 billion on a GAAP basis, certainly higher from what it was a year ago, and basically coming to all-time highs. Are car makers just not interested in making affordable vehicles, cars that cost less than $30,000 or less than $40,000?
That's a great and fair question. I think they are interested in making those vehicles, but it's since 2020 and the prices that people were charging for new vehicles and charging over sticker, I think some of those manufacturers have hoped that would continue, but that's just not the case now. The average American is not, I don't think, willing to continue that upward trend of the cost increases. So they're going to have to figure out something. That what we would refer to as maybe an entry-level car doesn't truly exist anymore. So where it's really affecting is the lower tier, lower income Americans that are really placed out of the new car buying market altogether. And they're going to have to figure out what to do in the future there, whether it's incentives or lower the cost of vehicles, which I think is going to be difficult for them to decide to do. But they're going to have to figure that out because they've really displaced an entire segment of our population.
Okay, so for those buyers who are pushed to looking at used vehicles, what does the inventory situation look like for them?
Used inventory, used vehicles are hard to get right now. It's been that way for a while, and I don't see that trend change anytime soon. With where the new cost is on new vehicles and with the current rate situation, plus the increase in gas prices, plus the increase in insurance prices, that's the reason many people are looking towards the pre-owned market. So that supply has stayed very low, and it's going to continue to stay low, which will keep some of those prices a little bit elevated. It's not a great market for buying a vehicle. It's going to get better, but we've been kind of stuck in a window here since post-COVID, and then as we all know, there's a big election coming up here tomorrow. So people are very reserved and waiting to see what happens.
All right, George, really appreciate your joining us today. Thank you so much. George Kauffman is owner and vice president of George Byers and Sons in Ohio, and raising some big question marks here.
We always refer to it as the great state.
Really?
of Ohio.
I've never done that. I've never said that.
That's what residents say.
Yes, Matt Miller, Ohio.
I'm a native son.
Yes.
Go Buckeyes.
Coming up, Berkshire Hathaway's cash pile reaching a record $325 billion, while Warren Buffett continues to scale back from major acquisitions. That'll be our top call next. This is The Close on Bloomberg. It's time now for our top calls to look at some of the big movers on the back of analyst recommendations. Let's start with Peloton, a rare double upgrade to buy from underperform at Bank of America. The analyst highlighted Peloton's strong profit outlook, telling clients for the first time in Peloton's history, the company is on a path of sustained EBITDA following years of losses and cash burn. He also hailed the appointment of new CEO Peter Stern as a victory that can reinvigorate subscriber growth. Shares up 4% on the day.
I'm taking a look at Roblox, an upgrade to overweight from equal weight over at Morgan Stanley. The analyst says the video game company is at an inflection point and quickly gaining market share. He says Roblox is reaching a broader audience, scaling on new platforms, and utilizing revenue streams like advertising and e-commerce to drive significant upside to his bull case. Still, as you can see, the shares today are down 2.25%.
And let's end on Apple. Loop Capital Markets cutting its price target to $275 from $300. The analyst keeping a buy rating on the stock, but lowering his estimates for iPhone revenue, unit sales, and average selling prices. Shares down marginally, about 0.2%. And those are some of our top calls. Matt?
All right, Scarlett, Apple has been a big topic of conversation after Berkshire Hathaway released its quarterly report. Warren Buffett's company once again cutting its stake in the iPhone maker, this time by about 25% in the quarter. Some analysts are taking it as a sign Berkshire is struggling to find ways to deploy its cash pile. That Warren Buffett himself is quickly losing interest in big tech. Joining us now for more is Cathy Seifert, Senior Vice President and Research Analyst at CFRA. She recently cut her buy rating on the stock to a hold. And Cathy, you know, it's interesting. If he's struggling to find something to do with his cash pile, I don't know why he would want to make it even larger. He has, I think, more cash on hand than any company ever has in the history of the world. Why is he selling his Apple stake now?
Well, I mean, I think the selling of the Apple stake actually made sense. It was becoming, you know, if you sort of look at Berkshire as having sort of several buckets, if you will, and they've got this equity portfolio that they actively manage. Apple was becoming really an outsized percentage of that portfolio, and it was becoming highly concentrated around Apple. So the fact that they sold those Apple shares actually made sense, and it sort of brought, you know, it was some portfolio rebalancing. But to your point, the combination of some decent cash flow generation coupled with proceeds from the sale of some of these stocks has led Berkshire to have a record cash pile and really not have a lot of good ways to use it. At least that is what the third quarter results appeared to show.
Yeah, so they have now, I don't know, something over $325 billion. I mean, just a monstrous amount of cash on hand and nothing to do with it, Cathy. What should Warren Buffett be doing with all that money?
Well, they're saying it's interesting because, you know, they don't pay a dividend. And one of the things in the quarter that I think investors are probably not going to be too happy about is the fact that they didn't even buy back their own stock this quarter. I think investors would like to see them make a significant acquisition. Realistically, they're not going to deploy all that cash. Mm-hmm. They're an insurance company. They need to keep some liquidity to pay claims. So, but even so, they could easily allocate $100 billion to acquisitions. The problem and the frustration at Berkshire, I believe, is that the M&A market has changed significantly over the last, let's just say, 20 years. Berkshire's now competing with private equity firms who employ a different model, can pay higher multiples for targets because they employ a degree of leverage. Right. And so Berkshire has really kind of struggled to find sizable deals.
Especially with valuations getting to where they are as well. So, Cathy, I look at the insurance business, the underwriting earnings declined, dragged down by catastrophe losses. How much does climate change and extreme weather factor into Berkshire's reliance on insurance? I mean, is this something that it needs to perhaps rethink? And very quickly here.
Well, it's an interesting point. And, you know, the insurance industry has had almost 5 years now of what's so-called a hard market, where the insurance industry has had pricing power. And this is my primary area of coverage. And it's actually that pricing strength that prompted me to initially put a buy recommendation on Berkshire. I think their core insurance businesses are attractive franchises, and I'm particularly encouraged by some of the progress being made at Geico. But to your point, climate change is definitely an issue. The insurance industry will leverage climate change into pricing strength, however. So as unfortunate a dynamic as climate change is, and it is a challenge for the insurance industry, they have it has enabled them to get some pretty significant pricing power. Having said that, I thought Berkshire's results this quarter in their reinsurance and their commercial lines business were a little mediocre. given what's going on in the broader marketplace.
All right, Cathy, that's all the time we have for it. Thank you so much for your take on Berkshire earnings. Cathy, of course, over at CFRA, Senior Vice President of Research. Coming up, writer and comedian Samantha Bee joins us to talk politics as more celebrities use their influence to get out the vote. It's just about 3:30 p.m. in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Matt Miller. Tomorrow is finally the big day, Election Day. The influence that celebrities have over their fan bases is a very powerful one, or at least a lot of them are betting on that. That's why a string of popular figures are putting out last-minute endorsements for their respective candidate. The Harris-Walz campaign has really attracted some big names over the last few days, from Jennifer Lopez to Harrison Ford. And of course, we can't forget the huge response Harris got from that Taylor Swift endorsement back in September. Joining us now for more on the risks and payoffs of celebrities in politics is Samantha Bee, comedian, writer, and producer of shows like Full Frontal with Samantha Bee and the documentary Red, White, and Blue. Samantha, thanks so much for joining us. This is, I think, a fascinating topic because you've had, I think, a resurgence in celebrity endorsements. A lot of them have really moved the campaign, seemingly. For example, George Clooney's New York Times op-ed. What made you feel that you should come out and say something, choose a side, and try and move the needle a little bit?
Well, you know, I've always taken sides. And I've always been pretty vocal about my opinions and the issues that I'm really passionate about. So this is nothing super new for me. And I think, you know, everybody's just doing what they can do. It feels like the issues are huge. The election is so consequential. Everybody's just trying to have a voice, trying to do anything. You feel like if you can move one voter in a particular direction, it will be worth it. I mean, if we have a platform to speak, it behooves anyone really to use it. And use it in as targeted a way as humanly possible.
Well, and you do have a massive platform. I mean, aside from being on TV, you've also written a book. You've got a podcast series.
Yep.
What do you do in order to get the word out? I mean, are you very active on social media? Are you really trying to reach as many of your followers as you can? How do you go about it?
Well, for me, I try to focus on the issue that is front and center for me. And in this election, and mostly in my body of work, it is about women's healthcare. And so that is the impetus really for being an executive producer of Red, White, and Blue, which is actually a short film, a narrative form, like a fictional story set against the backdrop of very restrictive healthcare, in particular abortion healthcare. And that's just an area of top concern for me. And I just think being involved in this project is so it's been very fruitful. It's been really engaging because it's the director of this film, who also wrote the film, is an incredible writer-director. And I think she makes real with her short film the stakes in the upcoming election, which is actually why she's made it available on YouTube for free until now, November 11th, which they've actually extended that period, which is great.
Thanks for explaining all that, Samantha. I want to broaden our conversation out overall to celebrities and activism, political activism. You talk about how you feel very passionate about reproductive rights. Do certain kinds of public figures face more pressure than others to speak out on whether it's political issues or social issues? I mean, I feel like the expectations differ whether you're a woman or a man, especially when it comes to something like reproductive rights.
I think it seems very individual to me. It's like if you are a person who is comfortable using your platform in that way, then by all means you should absolutely do it. It's not really for everyone. Not everyone wants to, it can bring negative attention your way. It can bring a lot your way. You kind of have to be up for the challenge. It can take you down It can take you down a very rewarding path, and it can take you down a difficult path. And I think you just have to be guided by your own kind of inner voice about where you're the most comfortable.
Right.
I do think people are jumping in right now because everything feels so fraught, and people want to have a voice, and they want to just, again, like, if you felt like you could move 3 voters in Pennsylvania in the direction that you think is the more positive direction, and I'm not saying which direction that is, but let's just say, I think people are moved to do it. Everybody's just doing all they can do.
I hear what you're saying, but it was not so long ago. I guess maybe it was a long time ago, in the 90s, when Michael Jordan famously said even Republicans buy sneakers and decline to endorse political candidates. And I feel like for a generation, at least male athletes, that kind of set the standard. To your point about people who feel moved to actually say something, do you think something like the Dixie Chicks could happen again? I know they're called the Chicks now, but back in 2003, they criticized President George W. Bush over the Iraq War, and they were blacklisted by radio stations. Their record sales plummeted. I know they've made a bit of a comeback now, but that took years off of their career.
Well, it certainly takes guts, actually. It takes, you have to be up for the challenge, because you actually don't really know. You don't really know how it's going to land with people. And it's, social media is a really powerful tool, and it has a really wide reach. Times are different now. It's different from when Michael Jordan took that stand. It's different from when the Dixie Chicks took that stand. The world is much more, personal contact is much more available to people, direct contact, much more available to people, and your voice spreads in 5 seconds across the universe. So it's a really powerful tool in a different way. It's, it's to each his own.
Yeah. Well, I mean, I'm sure celebrity endorsement has gone back since the beginning of time. I think of Jane Fonda, though, as just a standout in terms of somebody who really made a difference, or at least really stood out, and jeopardized her career to do what she thought was right. Is there a role model? Do you have a role model? Are you just playing
Jane
it by
Fonda,
ear?
That's a good one. I think that Jane Fonda is a very good example of someone who took giant risks, who really swung for the fences because she was so firm in her beliefs, and she took a lot of flack for that. And that is why I will always love Jane Fonda. Jane Fonda, I literally in my kitchen have her exercise album, like permanently placed, because she's such a great example of what is possible.
All right, Samantha Bee, really appreciate your joining us. Samantha Bee, comedian and writer, talking to us about celebrity activism, especially when it comes to politics. And of course, I think the Jane Fonda video, when she first began it,
I think Samantha wanted to add something. I felt that she was getting ready. Yes.
I was getting ready. I just want to encourage everyone to go to YouTube and watch the short film Red, White, and Blue, because I just want to underscore the importance of the issues with women's rights to health care are really on the table. So if you're having any question about which way to vote, please, I encourage you to watch this movie, and you can watch it for free.
All right, sounds good. Samantha Bee, producer of Red, White, and Blue.
See, I could feel that she was just racking.
You just read her
there.
mind.
Yeah, getting ready to plug the film, and I will definitely go to YouTube and check it out.
It's a reissue. To be fair, this is not something that just came out, so just put it into context. But it is a timely issue right now, obviously.
Absolutely. I mean, there's an election tomorrow. Did you hear about that?
I did hear. Yeah. Did you vote yet?
No, I'm going to vote tomorrow. I would say because I feel like it's a traditional move to vote on election day. The truth is because the kids and work have gotten in the way. Right. And I would have voted early, but yeah, I'm going to go to my the local school.
Yes.
Or am I going to see you there? Do we vote in the same?
No, we do vote in the same district, but I'm not going to see you there because I actually voted early, and it took a long time because they print up the ballot in front of you, and then they explain all of that, and then you have to feed it into the machine yourself because no one else wants to touch the ballot except for you. So I didn't realize that. That was like a whole new step to the process.
Yeah, well, I'm excited. I'm looking forward to exercising my right as
You're
an
going to get a
American
sticker out of
citizen.
it.
And hopefully some cookies.
I don't know about the cookies. All right, coming up, Fox and the New York Times both reporting earnings today, but their stocks couldn't be reacting more differently. We're going to break down those reports as part of today's Stock of the Hour. This is The Close on Bloomberg. It's a tale of two old-school media companies today, Fox and the New York Times. Shares of NYT slid after subscriptions and revenue missed estimates, while Fox rose after record political advertising fueled sales and profit growth. Joining us now to discuss is Chris Palmieri, Bloomberg Editorial's team leader covering media and entertainment. So, Chris, when it comes to Fox, it feels like if it's political advertising, this is kind of short-lived. It's going to happen for the quarter that ended and maybe a little bit of this quarter, and then that's it.
Right. There is always a huge bump in election years, particularly all the companies that own local TV stations. This has been a play for Fox and a lot of people to buy up stations in swing states because those are the ones where the spending is targeted. And also this year, Tubi, the streaming service, an ad-supported streaming service that Fox owned, has really come into its own. 19% growth in ad revenue in this recent quarter, and they said it was even accelerating in the current one. So that's playing really well into Fox's hands.
How much of this, I mean, I feel like if you're a media outlet that can get people worried, that can get people angry, that can really enrage your viewership is going to go up and it's going to be sticky, right? So hasn't Fox been able to do that really well, especially with Donald Trump? Why isn't the New York Times doing a better job of that?
Well, all of the networks benefited under Donald Trump. I mean, Les Moonves, a former CEO of CBS, famously said, I don't know if he's good for America, but he's great for CBS. Their networks in the Biden years were seeing fewer viewers. Most of this ad surge, and Fox reported a record revenue, was more due to these local stations and Tubi than Fox News. I just want to clarify that. Okay. New York Times is a different the story. They had decent numbers, just not what Wall Street was expecting, given that this was such a booming quarter for political news. And so that obviously worried people, and the stock took a hit. But, they still are over now 11 million subscribers, which is just a huge number as the rest of the newspaper industry really struggles to stay relevant.
Yeah, and they've really set the standard in terms of being a modern media company with all these different parts of the business to keep people invested in its ecosystem. What about this strike that's taking place right now at the New York Times, which, of course, in terms of timeliness, couldn't be at a worse time with the Tech Guild choosing to go on strike just before Election Day?
Right, and deliberately so. And the Times management says they've taken steps to prevent some sort of major technical problem for readers tomorrow. But yeah, this was something planned by the union. They weren't getting what they wanted, and they picked just the busiest day of the year practically to target management.
Yeah, fascinating strike, fascinating story at the New York Times, as well as Fox. You point out, obviously, that sports local stations, Tubi, have a lot more to do with that than Fox News. Chris, great to get the intel from you. Chris Palmieri there, Bloomberg Editorial's team leader covering media as well as entertainment out of Los Angeles. Coming up, we're going to count you down to the closing bell with Ari Wald, head of technical analysis with Oppenheimer Co. This is the close on Bloomberg.
I think we could see 6,000 potentially, in some sort of a clearing event that isn't, there's not a lot of consternation. People feel good about things. But then I think it's really hard for us to get past 6,000, 6,100 in any scenario, because then you're so stretched on valuation, and I don't see growth accelerating in a kind of way which would justify even higher multiples for 2025.
That was Mike Wilson, Chief U.S. Equity Strategist at Morgan Stanley, talking about the S&P 500 adding another, 280 points by the end of the year.
Seems like very little, right? To get to 6,000. I mean, aren't most strategists there already?
I know, but lately it's been a hard climb higher because everyone's kind of like, let's just take our chips off the table.
You mean like in the last 7 trading days?
Yes, in the last 7 trading days. With short-term vision, right?
It's only been a week since we hit an all-time high.
Yeah, but we're not quite at 6,000 just yet. But you don't even have the S&P 500
No, I didn't.
Here.
So here, they told me, okay, Romaine's out. You're going to fill in for him, but we don't expect much from you. Just give us 4 assets.
I think that's what they said. Okay.
So here's what I chose, because I think each one is newsworthy in its own right. The Dow Jones Industrial Average, which I feel like no one cares anymore. But now they're putting NVIDIA in, right, instead of Intel. That seems like a good move.
They're trying to be relevant.
Yeah, but they're putting in Sherwin-Williams instead of Dow Chemical.
Okay, that's a little bit less clear.
I mean,
than NVIDIA.
In the age of $3 trillion stocks, you're throwing in one that's less than $100 billion? All right, fine. The 10-year yield on Friday surged by 10 basis points to 438 on the back of a horrible jobs number. I don't know why. I can only surmise it was because the market said, all right, Trump's got this. And this morning, we erased that gain. Does that mean we're recalculating the Trump trade?
What strikes me is like we think an 8 basis point now is like, not that big of a deal. Those are big, big moves.
True. Well, they were big moves.
Yeah, maybe not so much in the last 7 days or 28
Bitcoin
days.
last Tuesday was trading for almost $74,000, right? It's dropped about $6,000 in a week. Maybe that's the Trump trade coming off, because even though both candidates say
they're pro-crypto, I mean, you know Trump is going to throw his lot in there. Well, you know who the crypto bros side with.
Yeah, absolutely. And then NYMEX crude, huge jump, really, 3% on what was an expected move from OPEC+. We kind of knew that they were going to delay production increases. Traders are worried about a glut. Oil prices have been coming down. They're not going to boost production into the face of that.
There's still this premium, this risk premium over what's going to happen in the Middle East, right? The escalating violence, Iran saying that's going to retaliate. So there's a whole bunch of different factors.
Iran has to say it's going to retaliate.
And it continues to say so. So that drives the oil prices.
Even the initial attack wasn't that great. So I can't believe, especially since Israel avoided hitting any oil infrastructure in Iran, that they're going to somehow drive the price higher.
I mean, the question just comes down to how much can you read into any of these moves on a day like today, before Election Day, when there's a lot of moving parts. So let's bring in Ari Wald. He's head of technical analysis with Oppenheimer Co. And Ari, let me just start there. How much can you read into today's moves, however big the move in bond yields might be or the move in oil might be, given that there's so much uncertainty and people, want to wait and see what happens?
Yeah, I'd argue one shouldn't read too much into a day-to-day move, especially when, I guess how we read it, the charts there hasn't been much significant change in the trends. Just it's been ongoing oscillations. And I think just kind of hearing your review of a lot of these markets, they've moved, but kind of in this very range-bound manner. And this is on par with typically what you would see heading into an election as well. October in particular, S&P 500 down 1% for the month. That's the typical performance in an election year of what you'll see in October. This moderation and just a lack of movement, and even down slightly. But then that does reverse post-election, November, December, much stronger months of the year once you get through that uncertain point of the calendar year. And so we'll see if once again, and we think so, that the market is positioned for a year-end rally.
Ari, I love talking to technical analysts. I'm always over at Abigail Doolittle's desk asking her what this means and what that means. But is there a chart for which you have no model? I mean, do you ever see a rally where you're like, I don't know what's going to happen after this because we haven't had, back-to-back gains of more than 20% at 5% Fed rates? Like, what do you see when you look at these markets?
That's a great things that never happen all the time, and it's so easy to kind of come up with these studies, and a lot of the time it is just that there's not much change, and for what we're trying to do is really just take a step back and make it as simple as possible and just follow the trend. And the trend's been higher, right? We've been in this bull market cycle for the last 2 years now. We just reached the 2-year anniversary. I think it is important to look at history to see kind of how these cycles typically unfold. Typically you'll see a 70% rally over a 32-month period in a bull market cycle. How we see it, S&P 6,000 is probably fair value rather than an overvalue, just kind of based on how these cycles typically unfold. And then it's what is actually happening. And we'd argue that the market is behaving in a manner consistent with an up cycle that should work. Because not only have the cap-weighted S&P coming off a new cycle high, equal-weighted S&P coming off a new cycle high as well, the breadth underneath the surface remains broadly based, how we read it.
So, Ari, when you look beyond equities and you look at the other asset classes as well, I'm wondering from where you sit, which asset class leads the way? Which has the most sway over everyone else? Is it credit, for instance, which typically everyone says credit always leads? Is that the case this time around?
Well, looking at credit spreads, I think they do a great job leading into a market top, probably more coincident off a market bottom. But as far as a leading indicator into a top, there's really not much deterioration that we're seeing in the high yield credit spreads that we're tracking. I think interest rates are going to be important to monitor. Be careful what you wish for. By the time you get lower interest rates, it's the market signaling more imminent recessionary risk. So that was a bit of a threat in that Q3 period, July, August, when rates were breaking down. I take the fact that rates have snapped back here as arguing against that imminent recessionary risk. That, generally speaking, it's not high rates, it's not low rates or high or low commodities or currencies. Equity markets want stability. And I think as that 10-year oscillates around its 200-day average, that does speak to intermarket stability, perhaps later equity cycle, but not end of equity cycle.
All right, good stuff. Ari, really appreciate your joining us today. Ari Wald is head of technical analysis with Oppenheimer Co, giving us a technical perspective here as we, of course, await the election and we look at markets that are moving, at least in equities to the south, to the downside a little bit here. But again, I don't know how much you can read into it. The S&P sitting at its 50-day moving average for what it's worth.
Yeah, I was actually looking to see, I expected far less volume today. You can see with the WEI function, the volume now compared to the volume at the same time over the last 30 days. And we're looking at really similar volume moves.
All right, we're moving closer to the closing bell. We've got full market coverage right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. I'm Scarlett Fu here with Matt Miller, and here to take you through the closing bell, we've got a global simulcast. Carol Masser and Tim Stenovic. Romaine Bostick is in Michigan on reporting duties assignment. And of course, he'll be joining us a little bit later in the hour. But in the meantime, welcome to our Bloomberg Television, radio, and YouTube audiences worldwide as we look through this trading day. Carol, do we look through this trading day? I mean, how much can you really read into the price action today, given that everyone's just kind of on tenterhooks waiting for tomorrow to go by and waiting for some kind of outcome to this election?
I think you're spot on. I think the other thing is just sensitivity, right, to headlines or to whether or not, a poll or something is saying the vote's going to go one way or another. And listen, ultimately we won't know, and we might not know 24 hours from now. So it's going to be interesting. But, you get traders set up on Wall Street and around the globe. They're going to play the volatility trade. That's for sure.
They are. And I think, everybody's kind of talking about the election tomorrow and the aftermath of that. But don't forget, Jay Powell and company they're sharpening their pencils, getting ready to do a one-day delayed Fed meeting. So we'll get a Fed decision on Thursday. I'd say it's a pretty busy week, guys.
But I mean, does anyone expect the Fed to do anything other than the 25 basis point cut they're determined to do regardless of the data? Yeah. Like, that's what they're going to do, right?
You heard from Elizabeth Warren earlier today calling on the Fed to...
Every month she does that.
That's
Every month Elizabeth writes that letter.
50 basis points is what she wants to see.
Well, Citigroup's Veronica Clark did say that she expects the Fed to cut by 50 basis points in December. I mean, November is pretty much going to be a done deal with 25 basis points. In any case, that is on Thursday. We're still on Monday right now, and we're closing here with losses in the major equity indexes. The Dow Industrials losing 0.6%. Matt is all obsessed with it because it's going to have NVIDIA soon and Sherwin-Williams, but less so Sherwin-Williams.
And that's because, on the morning show that I co-anchor with Katie Greifeld and Sonali Bassick, it's called
that's enough.
Every day from 9 to 11. Anyway, the ladies on the show always poo-poo the Dow. They call it a silly index. They can't understand why it's price weighted. And it's hard for me to argue against them when you see S&P putting Sherwin-Williams in there instead of Dow Chemical. But it does make sense that they put NVIDIA in instead of Intel. I think it really helps them regain some relevance.
All right. And of course, declines in the NASDAQ and the S&P too. The Russell 2000, kind of the outlier here, gaining 0.4% as investors flock to small caps, at least for today.
Hey, quick check on the big caps, guys. And you've got not quite an even split, but a little bit more positivity. 271 names gaining ground on this Monday, 230 to the downside, and Matt, 2 unchanged.
All right, let's take a look at which sectors or industries are doing better than others. On a day when a lot of people have declared the Trump trade over and done with, you do see energy kind of leading the way. And that makes sense with the underlying commodity up 3%, oil that is. Consumer staples are also up, but pretty much everything else is down. You can see that communication services is down, consumer discretionary is down, financials, IT. So it's really energy that leads the way with this 3% rally in crude.
All right, so seeing a lot of red there on the IMAP. Let's get to some of the individual gainers. Matt mentioned NVIDIA, and this one rallying. It was up as much as 2.6% today, pulling that back a little bit with a gain of about 0.5%. So, but of course, that news Friday after the closing bell, the S&P Dow Jones indices saying that that company, NVIDIA, will replace rival Intel in the Dow Jones Industrial Average. So quite a change of time, or changing times, I should say, for Intel. Intel out, NVIDIA in. So we've seen some movement into that name. Hey, what's interesting, Matt, you mentioned, Scarlett mentioned, the political trade, the Trump trade, pulling back on that today. So you saw the solar names rallying in today's session. Take a look at Invesco Solar ETF. 10 is the ticker, and that one is up about 3.25% in today's trade. I think we've got some earnings crossing.
We do. We have Wynn Resorts crossing right now, and it looks like third quarter adjusted EPS does miss analyst estimates. 90 cents was the reported number. Analysts were looking for north of $1 at 103 specifically. Operating revenue also coming in lighter than anticipated, $1.69 billion. Analysts were looking for $1.73 billion. And in terms of the Las Vegas operations, which is only part of it, right, because it very much depends on what's going on in Macau and in China. Las Vegas operations, the revenue there was $607 million, lighter than what was anticipated, which was $610. So both on the Las Vegas side and it appears on the international side, when reporting a miss. The stock not moving in after hours trading. Actually ticking lower right now.
All right, down about 3% Wynn Resorts. We'll keep an eye on that, and we'll watch for some other earnings. I mentioned, though, the Invesco Solar ETF. We really did see, tariff-sensitive industries gained, solar firms gained, prison and cryptocurrency companies slumping today as investors paired bets on a Donald Trump win. So I just wanted to mention that. And just one more for you, speaking of the elections, Trump Media. This one was down 5.5%, up 17% at its highs, finishing the day with about a 12% gain. And so just wanted to point that out as we kind of watch the back and forth on that
That
one.
Trump trade narrative doesn't work here, right? Because Trump Media, DJT, is higher.
That's what I said to Tim. I go, wait a minute. I said, you should probably do Trump as a decliner. He's like, it's up. And so I don't know, kiddo. I don't know.
Trump trade narrative could be hogwash, right? It could be just us making something up to try and explain what we don't quite understand.
No, I actually think when there's, don't you think when there's optimism or polling that's saying one thing or another, you do see play out in the markets.
Yeah, it's just not consistent across asset classes, at least for today.
The Trump Media one too is one that's shorted a lot. So I think there's a couple things up.
It's like doubled this year.
I know, it's up, yeah.
Yeah, they less than $1 million,
90%.
less than $1 million in revenue in its most recent report, guys.
But it's a $6 billion company.
Yeah, I know.
Okay, so it's a little
detached. I think people would argue detached from fundamentals, and they wouldn't be wrong.
Nicely done.
True.
Hey, let's go to some decliners today. This is not hogwash. Marriott International falling 1.6%, falling the most intraday in nearly 3 months, though, off of those losses. The hotel company cut its adjusted earnings per share guidance for the full year. We also saw them record earnings per share of $2.26. That was lower than the average analyst estimate of $2.31, according to data compiled by Bloomberg. The New York Times shares falling today by more than 7%. This after the company reported third quarter revenue and subscriptions that fell short of analyst expectations. The company's tech workers also went on strike the day before the 2024 presidential election. The Times added 260,000 digital subscriptions, down from 300,000 in the second quarter.
All right, we are looking at Hims and Hers, appropriately, I think, renamed to express the importance of both genders in taking pills. Their third quarter revenue beat estimates. So, of course, this is a company that makes, I don't want to say knockoff, but off-label.
There you go.
Medicine for people who are having problem with hair loss or erectile dysfunction. In any case, third quarter EPS was 32 cents. There was last year a loss per share of 4 cents. They've done incredibly well in this market. In terms of orders, they missed. So net orders were 2.66 million. The estimate was for 2.8 million. So maybe the street was a little bit too pumped up on orders, but we do see a beat on third quarter revenue, $401.6 million. The street was only looking for $382.2 million. million.
All right.
Pretty small numbers.
Let's get to one that's really been outperforming this year, Palantir, which is up 140% here in 2024. Well, this company reporting record profit, citing unwavering AI demand. So reporting record quarterly revenue. It beat analyst estimates, raised its forecast for operating income in the current period, citing specifically high demand in the United States for its artificial intelligence software. Third quarter sales increased 30% to $725.5 million. Analysts on average were looking for about $703.7 million, so easily a big beat there. Palantir also reported net income of $144 million, as I said, a record for the company, and you can see that stock, despite outperformance here in 2024, another 10% higher here in the aftermarket.
Also up 10% is the Real. Shares are higher after hours after the company raised its fiscal year guidance. Third quarter revenue also coming in above estimates at $148 million. Estimates were for $140.3 million. The company still sees fiscal year revenue of $595 million to $602 million. The estimate was for $586.5 million. Once again, shares in the after hours up by 8.5%.
Yeah, and this may speak to the idea and the way that people shop and how it's changing, especially as consumers grapple with inflation. This idea of the circular shopping experience.
I think this is something like, it's so interesting to talk about, and I've heard Carol and Tim talk about this on previous episodes of Business Week, but the bottom line is it's a business in which you really can't scale. I mean, there's no way to make a lot of money in this business, and that's why it's only worth $330 million.
But it's doing well even at that level, right?
Yeah, I mean, this is outperforming this year. It's, I'm just taking a look, up almost 52% here.
But it's only worth $330 million in total market cap. We spend most of the day talking about trillion-dollar companies. It's not even worth $1 billion.
But how many investment advisors come on and say, we got to look at the small caps, right? You know, we want to see the market, breath widen out. I'm just,
It's a tiny cap,
they need
but interesting.
But we're looking at across the market, right?
Yeah.
All right, we're looking at shares of Cleveland Cliffs in the after hours. Pulling them up on the Bloomberg terminal right now. Shares are getting pulled up on my terminal right now.
Third quarter revenue missing estimates, Tim.
Yeah, down 5%. Thank you. I appreciate
stock
that.
down about 5%. Yeah.
Okay,
slow in the delay here.
$4.6 billion in third quarter revenue. Analysts were looking for $4.74 billion, and the continuing loss per share was 52 cents. Analysts were looking for earnings per share of 50. No, that was last year. Earnings per share of 52 cents. Good. We're not comparing like with like here. We're just giving you for this past quarter and the year ago period.
Yeah, a little slow to come, so we're trying to work our way through these numbers. Third quarter revenue, 4.6, so that was a bit of a miss. 4.74 was what the street was expecting. So that stock is down about 3.5%. It's down 35%, 36% this year, Tim.
All right, there it is.
Yeah, all right. A little bit of earnings, guys. All right.
You guys ready for tomorrow?
Matt, you have any other comments?
Well, I love your show because I listen to you guys almost every single day. So I've heard a lot about the circular economy. I'm interested in it too, but it's just not one that makes a lot of money.
Flattery will get you everywhere.
We'll leave it on that note.
Matt, the Real is calling. They want to talk to you.
I got to check it out. I want to see what they have.
All right. Talk to your wife. She probably knows about the Real. I'm just saying. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We do it all. We will see you again, same time, same place tomorrow.
All right, coming up on the close, we're going to take a closer look at those results from Palantir doing well, and the stock is moving higher in after-hours trading. This is the close on Bloomberg. Welcome back to The Close. I'm Scarlett Fu.
And I'm Matt Miller. Let's take a look at where the markets closed out the day. In terms of the indexes, well, here's the Dow Jones Industrial Average. I've been watching that because of the interesting substitutions that we heard about over the weekend. Dow Chemical will no longer be a member of the Dow Jones Industrial Average. It's out. They're replacing it with Sherwin-Williams. But I think far more importantly...
Not right away, though. Not till Friday.
Right. Yeah, well, so I guess you still have time. There are not many Dow tracker ETFs.
Right? There's the diamonds.
I wonder how many Yeah, there's one.
Yeah, well, that's one.
That's it, though. That's the only one. It's not like, if the S&P makes a substitution on the S&P 500, then it drives a ton of money globally because so many investors are tracking the S&P.
So maybe this will change now that it's making a change in its constituents.
Exactly. So they're adding NVIDIA instead of Intel, which makes a lot of sense. You take out one like $80 million stock and you replace it with one that's $80 billion stock, and you replace it with one that's $3 trillion and change, $3.5 trillion. That makes a lot of sense. The 10-year yield did erase everything that it gained on Friday. So Friday we were at 430, went to 438. Now we're back down to 429. Does that mean we reversed the Trump trade?
Well, the sell-off is still there. It's just kind of a pause in the sell-off.
The sell-off, exactly, which drove yields higher, I think, to the tune of about 70 basis points over the past 3 months.
Yep.
Bitcoin right now at 67,004, off 2.5% on the day. It's down about 6,000 and change from last week. It hit a high on Tuesday of $73,000 and change, if you care. And then NYMEX crude, you should care, up 3.25%. That drives a lot. That's why energy was the big gainer in today's equities trade today. And the concern here, we knew that OPEC Plus was going to delay its production increases, but there's still, even with that, is concern of an oil glut. Concern for them, hope for me.
China, part of that story as well. And of course, we'll get to China later in the hour, but let's just take a look at some of the day's big movers in terms of individual names. Viking Therapeutics, this is an interesting one because it surged in pre-market trading, opened higher after its experimental drug proved effective in showing weight loss in patients. And this is a pill, but the stock actually turned lower after AstraZeneca presented similar data for its medication. All this goes to show that the market for weight loss drugs is very, very, very competitive. We're going to talk about this a little bit later on. NVIDIA and Sherwin-Williams, and this is to your point, because you were talking about the Dow Jones Industrial Average. These guys are going into the Dow come Friday.
Makes a difference to Sherwin-Williams, right? That's a $93 billion market cap, so it's not the same as $3.5 trillion. It's going to drive those shares.
Definitely a game changer for it.
Another company that we're paying close attention to, and you just heard us breaking the earnings for you on the simulcast, is Palantir. Shares of the company right now up after hours 12.33% after reporting results. Gil Luria, head of technology research at D.A. Davidson, joins us now. And Gil, I guess even beyond earnings, there must be some hope for investors in this company that Trump wins the election tomorrow. Is that a fair statement? Just because it seems like the tech industry is so behind his vice president, J.D. Vance, getting into the White House.
Well, I think there's something about the fact that the investors and folks that are very close to Dr. Carr are affiliated with the Trump campaign. But realistically speaking, in terms of Palantir's business, even on the government side, what really drives it is global instability. Palantir is devoted to promoting Western civilization and protecting Western civilization. So as long as there's global unrest, their government business will do well. And most importantly, if you look at the results today, their commercial business is doing far better than expectations.
Yeah.
So Palantir will do well under any administration.
So that's a great line, that the tailwind for Palantir is global instability, that's a meaningful factor for its growth. Let's talk about the commercial side here, because a lot of the expectation coming into this report was that it would sustain at least 30% growth, but it looks like that commercial business grew 54%. What is the trajectory for this business in terms of perhaps being on par with the government business and perhaps even surpassing it one day?
Well, it's definitely on pace to surpassing the government business. And it's because Palantir is very uniquely positioned to help companies achieve their AI goals in the short term. Companies have really two choices. They can either buy packaged software that's not really a good fit for their business to do AI, or they can have a consultant build them something custom. And Palantir comes in right in the middle of that and says, we have packaged software, we have the right orientation for the data structure, and we have the professional services to help you accomplish your specific goals. They are best positioned in that regard. And right now, based on these results, they're probably the best story in software based on that positioning.
Yeah, I mean, a lot of the tech companies that I'm sure you follow, Gil, have to invest, if not tens of billions of dollars in chips and data centers, they have to at least rent space at those places. Is this a company that can profit off of AI without the big CapEx spend?
It is, because they're actually building tools that companies are using to generate more revenue and save on costs. And they don't have to build these massive data centers with very expensive NVIDIA GPUs to accomplish that. They are building those tools on existing hyperscaler capacity. They're just helping companies implement those tools, figure out what business problems they have to solve, and then helping them solve it with their existing product set and their professional services. So in that regard, their business is generating the ROI that the hyperscaler business isn't quite doing quite yet.
So where does a Palantir need to spend money on? If it's not on CapEx, if it's not to build out those data centers, that physical data center, where does it invest its money to continue to grow at the rate it has been?
Palantir's secret sauce is the folks it can hire. It's the people. They need to hire people that are both at the cutting edge of AI as well as have specific industry expertise in order to build the tools that individual companies can use. That's why Palantir is so selective in its hiring and why so many people apply to work at Palantir. It's because those consultants, those professional services staff that they have are very high yielding, more high yielding than really any consultancy. And that's because Palantir can develop these custom solutions based on the software that they've already developed.
All right, Gil, thanks so much for joining us. Gil Luria there, head of technology research at D.A. Davidson, talking us through Palantir. Of course, we're focused on a number of stocks after the close, including Domino's, whose CEO, Mark Van Dyke, is going, or whose CEO, I should say, Don Meij, is going to step down, and Mark Van Dyke is going to replace him. Have you had Domino's pizza lately?
I live in New York, so I don't eat Domino's pizza.
Oh, because there's too many other good choices?
I don't
understand that.
I don't understand people who live in New York and eat Domino's Pizza or Pizza Hut. Why would you do that?
Well, for a long time, I would go to Pizza Hut anyway, just because it was so simple and there, until I found, this is when I first moved back, right? Until I found some of the amazing pizza joints
the local
that we
pizzerias,
have
yes,
in Westchester.
exactly.
Beekman Ale House, have you been to that place?
No.
It's insane.
No, you've given me a couple recommendations, but not that one. All right, and we're also looking at Dollar Tree moving in after hours trading right now. It is higher by 3.6%, and this is after it has reiterated its third quarter 2024 outlook. It says its review of its strategic options are progressing, and also making a strategic announcement in terms of interim CEO. Michael Creedon is the interim CEO, and Edward Kelly III has been elected chairman of the board. Domino's Pizza right now unchanged at the moment. We're going to stick with earnings. We're going to break down Wynn Resorts, Cleveland Cliffs, and Hims and Hers. That's coming up next. This is The Close on Bloomberg.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7 live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
A wave of earnings washing up on us. Let's get you a roundup of some of the notable movers and bring in Bloomberg's Jess Menton, Bailey Lipschultz, and Abigail Doolittle. And Jess, let's start with you on Wynn Resorts.
Well, we're going to start with those casino operators. So if you're looking at Wynn stock in after hours trading, down about 3%. So not quite as much as that one-day implied move in the SERP function, around 5%. But what happened here, and actually shareholders knew coming into this report that it could be disappointing because we already saw those reports from Caesars and MGM recently that also had disappointed, but it was specifically operating revenue revenue in the third quarter. Those expectations were supposed to be around 1.73 billion overall for the quarter, but it actually came in at about 1.69. But specifically, if you're looking at Las Vegas, that's what really dented it, because about a third of its earnings, when you're looking at its revenue specifically, is derived from Las Vegas, and that came in around 607 million. The expectations were 610 million. But overall, if you look at its stock, though, even though it's up around 5% year to date through today's close, it's actually up roughly 30% from the low back in August, but it's given back about 10% over the past month. Not surprisingly, probably because if you're thinking about how China delayed some of those stimulus plans, but it does derive almost 50% of its revenue. Not as much as Las Vegas Sands, but still enough when you are looking at Macau. So it's going to be important on this earnings call because Beijing is supposed to reveal some more stimulus plans later on this Friday. So we'll see if they say anything on the call about this. But I know Bailey's keeping a close eye on those steel stocks today.
Steel stocks in the red. Also, Jess, you can see Cleveland-Cliffs down 3.5% right now. This coming after revenue missed expectations. It's been a tough go for those steel companies. Cleveland-Cliffs outright calling that their high exposure to the automotive sector is impacting the company more than competitors. They do expect to see a steel demand in 2025, but that's not really doing anything for investors here in 2024. When it matters, you are seeing the company reining in their capex spending for 2025, slashing that by about $50 million in what they're looking for. But it does seem like we're going to continue to see a rough go for some of these steel names. Obviously, all eyes on the election tomorrow and what that can mean for steelmakers as well as kind of the entire industrial space. So certainly a sector that will be closely watched both Tuesday and in the days following as we get some of those election results, and eventually we'll get a winner deemed for the president. But as you can see, down 3.3%, rough go for Cleveland-Cliffs. Abby, hopefully you have some green on the screen.
Yes, indeed. After two laggards, let's take a look at the shares of Hims and Hers, up 6.2%, at one point up closer to 10%. They put up a very strong third quarter, beating sales. They also beat the average order size. Very impressive. Earnings came in at 32 cents versus the estimate of 4 cents. The only small wobble here was subscribers, slightly less than expected, but the outlook also positive. So investors really cheering this. The shares up 5.4%. Let's see if these gains can hold on into the open tomorrow, Matt.
All right, Abigail, thanks very much. Bailey, Lipschultz, and Jess Menton, thank you as well. We also had Hims and Hers, which we were talking about. I mean, the revenue beat the consensus. The EPS turned to a gain from a loss. I know orders were a little bit light, as was the gross margin, but still it's almost an 80% gross margin, which is just absolutely filthy.
Yeah, that's bananas.
I love it.
Absolutely filthy. That's a good way.
In a good way.
Yeah,
right?
all right.
I mean, 80% gross margin, I want it into that business.
Seriously. All right, coming up, we're going to speak with the CEO and co-founder and CEO of China Beige Book, Leland Miller, about the state of relations between the U.S. and China, especially as China holds its NPC meetings. This is The Close on Bloomberg. China's top legislative body kicking off its week-long meeting, and of course this just ahead of tomorrow's main event, the U.S. presidential election. For more on how the U.S. election could reshape the ties between the world's two biggest economies, we want to bring in Leland Miller. He is CEO and co-founder of the China Beige Book. And of course, Leland, we're talking about the Chinese National People's Congress. The Standing Committee meets from November 4th to November 8th, and there's a lot of expectation that perhaps they will announce some top-line figures for fiscal stimulus. Up until this point, it's been a lot of hurry up and wait when it comes to details on fiscal stimulus. Are we going to get any kind of detail from the NPC during this Standing Committee meeting?
We should get more details, but, it's not at all clear we're going to get all the details we want. I mean, people are looking first and foremost for a headline number, but a headline number can apply to 1 year, can apply to 3 years. If it's 2 or 3 years, you never know whether you're actually going to get that stimulus down the road. They want to see, how much of this is going to be consumption and how much of it's simply going to be, injecting capital in the banks or injecting capital into local governments who are having a hard time. So all of this matters, but the very fact that it's taken months for this to slowly roll out shows that, they don't want to overplay their hand. They don't have a very good plan to start with. They're trying to play off what they think is happening down the line, and they only really want to do the least amount they can get away with going forward.
So elaborate on that. They only want to do the least amount they can going forward. Once upon a time, people who invested in China and looked at China waited to hear what the government anticipated in terms of GDP growth for this year or next year, and they kind of pinned everything on that. Does China not operate with that blueprint anymore?
Yeah, once upon a time, indeed. They don't operate with that blueprint anymore. It used to be that the way that the Chinese Communist Party would show that they are running the country well to the people, to the international community, et cetera, was to hit high levels of growth. And they would announce high levels of growth, and then they would do everything in their power to meet them, which they always did. And then they'd say, look how good we are. They've really moved away from that because the worry is over, with demographic headwinds, with enormous amounts of bad debt in the system, they realize that they can't just, print money and send it all into property anymore. So what they're doing, in effect, is trying to prioritize national security priorities that are what she's worried about and not hit growth levels, certain levels of growth for growth's sake. The move away from that has been, in the last 3-4 years. But right now, I think we spend way too much time in the West worrying about GDP growth targets and GDP growth numbers instead of actually what Xi Jinping is worried about.
Which is national security, right? Which is advanced technology, which is getting a leg up on these things.
That's exactly right. What Xi Jinping wants to build up a domestic chip ecosystem. He wants to lead the fourth industrial revolution, which means dominating all these technologies, the AIs, the quantums, the biotechs, the robotics, et cetera. And this is what he's focused on. They want to make sure that supply chains are resilient and are not overly, the West doesn't have as much leverage over them. They want to make sure that U.S. dollar payment systems don't cause trouble in China. So there's a lot of worries that they have that they didn't have 10, 20 years ago, and these are the things that they're trying to focus what capital they have on this. It's not to just boost growth in the property sector so that Western investors get real happy for a weekend or two.
Leland, do you think that President Xi would prefer Donald Trump or Kamala Harris to win the election, one or the other? Because Trump would say, she's scared of him. On the other hand, Harris would say tariffs don't really matter to China. They're just going to end up being a tax on American consumers.
Yeah, I don't know. I mean, there's a lot of speculation about this, so I try not to give any decisive answers because nobody knows what's in Xi's head. I think they do know that there's going to be very different dynamics under a Harris presidency versus a Trump presidency. And I don't think markets have completely digested that because they saw very little difference between, what Biden did on China from President Trump before him. But I think that the next go round will actually be quite different because you will see a lot of emphasis on trade if it's President Trump. You will see tariffs. You will see other big things. With Vice President Harris, very unclear where her mind will be on these things. It will be some continuation of Biden policies, but there's also a prioritization of the Middle East and Ukraine and other things. So I think it's a little bit more of an unknown actually for the Harris side. Yeah,
although the Biden administration, as you said, has been very hawkish on China trade. Leland, you said something about those industries that China wants to develop, to incubate national champions in those particular industries. China needs to retain talent. It also needs to bring back the talent that is currently in Europe, in the U.S., in other parts of Asia, scattered all over the world. Is it doing enough of a job to bring those talented people back?
It sure doesn't look like it. I mean, if you're trying to attract your countrymen back home, then you have to create something appetizing for them to do at home. Now, granted, there is a lot of emphasis right now on advanced technology sectors in the country, but if you're living your life in Europe or United States or somewhere else, are you looking back at what your life would be like in China and saying, ooh, goody, let me do that? I don't think a lot of people are. So maybe there's mixed motives. Some people come back for nationalistic reasons and et cetera. But, the attraction of going back into China right now when times are actually quite tough, it's not obvious why you would do that.
How worried are you about confrontation over Taiwan? And does it matter who's in the White House?
Well, it depends how long a timeline. I think a lot of the talk about something happening in the U.S.-China relationship, over Taiwan in the coming months or the next year or so, I think that's way blown out of proportion. But look, Xi Jinping gave the world a date on 2027 as 2027 is the year that he wanted his PLA to be able to invade Taiwan and take it over. So I think the world has to take that seriously. I think that there's a forced posture right now in the Pacific that's very imposing for people who are looking to deter China from action. So, the longer you go out, Chinese capabilities are going up. Chinese defense spending is going up. It gets very, very scary about what could potentially happen, either intentionally or as part of a miscalculation.
All right, Leland Miller, really appreciate your joining us today. Leland is CEO and co-founder of the China Beige Book. It's time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Judy Dimon. She is the wife of JP Morgan CEO Jamie Dimon, and she has been knocking on doors in support of Kamala Harris in Michigan. Longtime Democrat donor. She donated $250,000 to Kamala Harris and the DNC.
Yeah, and of course, Jamie hasn't declared support for either candidate. Publicly, but also he has written letters that you can easily read through. I'm watching Ken Griffin, the hedge fund billionaire, is firmly anti-weed, like anti-marijuana, providing $12 million to oppose a referendum that would legalize recreational pot in Florida. And this is interesting because I think both of the candidates, Harris and Trump, have said that they would support federal legalization.
Yes. Ron DeSantis, the governor of Florida, is obviously leading this anti-weed campaign. But the marijuana industry has poured $153 billion into Amendment 3, which would legalize recreational marijuana in Florida. And a recent poll shows that about 60% of Florida voters are in support of that as well.
Well, whether it's legal or not, people in Florida are going to be smoking pot.
Yes, that is happening. All right, rounding out the top three, music producer Quincy Jones has died at the age of 91. His contributions to music span more than 6 decades. But for children of the 80s, like you and I, Matt, he's best known for producing Michael Jackson's best-selling Thriller album.
I will never forget where I was at a roller skating party in Columbus, Ohio.
That's
when
very
I saw
on brand.
The Thriller video premiere. It was amazing. And, I think We Are the World also kind of shaped my childhood. And maybe you're not quite as old as me, but yours as well, right? It was just Quincy Jones was able to bring together the biggest stars in America to do work on that album. From Bob Dylan to Prince to Bruce Springsteen, they all came together to do that.
Huey Lewis, Cyndi Lauper, Bono? No,
Sorry,
Bono did
Prince,
the other one.
I think Prince actually wasn't.
Prince declined.
Prince wasn't there.
Yeah, he was not part of it. Bruce Springsteen was there.
Springsteen was there. Dylan was there.
Michael Jackson was there.
Bob Geldof was there. Michael Jackson was there. Yeah, everybody but Prince. I misspoke. Not
All right,
Prince.
Quincy Jones, legendary musician, composer, and media executive, passing away at the age of 91. We're T-1 until tomorrow's pivotal general election. My co-host, Romaine Bostick, is on the ground in Michigan, and he joins us now from Huntington Place. It's a ballot counting station in Detroit. And Romaine, I know you've gotten a chance to talk to a lot of people on the ground, whether it's the head of the Detroit Elections Department or poll watchers. What are you learning from them?
Yeah, everyone's really prepared right now for what they are anticipating is going to be a busy night, though they aren't expecting a repeat of what we saw back in 2020. That was when the vote count went all into the night. Basically, election night turned into an election week. A lot of concerns here back then on that day about some of the late absentee ballots that came in and whether they were being counted properly. I did have a chance to catch up with Daniel Baxter. He is the COO of the Detroit Elections Board here in the city. He said that the voter counters that you see behind me, they've been at work already for days now, counting those absentee ballots, and they are prepared to make sure that those ballots continue to be counted as they come in on Tuesday night. He's also saying, will it be a long night? He assured me that he thinks that they can actually get the vote count done on Tuesday night, and he'll be out of here at a reasonable hour to go get himself a Coney dog.
We have a comprehensive result reporting program in place to ensure that all returns are reported by not later than 12 o'clock midnight.
Talk about some of the security measures that have taken place this year that are different than what we saw during the last presidential cycle in 2020.
So in 2020, in order to get into the Central Counting Board, all an individual had to do was walk into the processing hall, sign in, and challenge, if you will. Now we have a much more rigorous access point that individuals have to go through in order to come in. You have to go through the magnetometers. You have to swipe in order to come into the processing area, and you have to have credentials. So now we have a much more rigorous process in place, which includes conversations that we've had with the Detroit Police Department, the U.S. Department of Justice, the state troopers, as well as the Wayne County Sheriff's Department, to ensure that everybody who comes into this processing area feels safe, whether you are a poll worker, a challenger, member of the media, or even an observer. You'll feel safe and secure. We have Detroit Police Department officers strategically located throughout the hall, as well as externally, to make sure that if anything occurs, we can deal with it in a very expedient fashion.
Some of the, ugliness that we saw back in 2020 was largely because of the perception that the process of counting the votes wasn't transparent. What's the message that you have for the voters here in Detroit, that their votes are not only being counted, but being counted in a fair and equitable way?
Yeah, so that's something that we've been doing for 30, 40 years. I've been here since 1985. It's always been a transparent process. Challengers and observers have the opportunity to come in here and watch the process. Behind me right now, we're processing and tabulating absentee ballots, and there are challengers present to observe the operation. They've only given us kudos to what we've done, how we revamped the process to make it more conducive to their understanding. So I would say to Detroiters, you can be assured that every ballot that is received, we process it with the care that the law provides for us to make sure that their voices are heard on Election Day.
And that was Daniel Baxter. I caught up with him a little bit earlier. As you said, I also did get a chance to talk to some of the poll watchers, if you will, both representing both major political parties here. They are attentive, but the overall mood, I can assure you this right now, is one of optimism and one of a constructive night, one that will be free of some of the ugliness that we saw 4 years ago.
All right, we certainly hope so. Romaine, thank you so much. Our thanks to Romaine Bostick, our co-host, who's out on the campaign trail in Michigan. We'll be joining him tomorrow there again.
Now, despite what the data shows, many are still concerned about security at polling sites like the one Romaine was anchoring from or reporting from. But Bloomberg Opinion columnist Mary Ellen Klas says we need to trust the data. She says the resources devoted to fending off threats have grown drastically. And guess what? This is a quote. It will likely continue because America's election system is modern, secure, and difficult to breach. Joining us now for more is Bloomberg Opinion columnist Mary Ellen Klas. And Mary Ellen, great to have you on the program. Thanks for joining us. It is surely just a very small amount of voter fraud, but I think the AP found something like 400 cases in 6 swing states. The Brennan Center found about 1,000 nationwide, and the Heritage Foundation has recorded about 1,400 cases of voter fraud throughout elections. Isn't it imperative that even if it's a tiny amount that isn't enough to sway the outcome of a national election, we put a stop to it?
I think it's important to put this in its proper context. I think all of the statistics you mentioned extend, are examples of fraud that have extended over multiple years. And if you think about it, there are thousands and thousands of election jurisdictions across the country. And yes, indeed, there will be mistakes that happen. But the process is one that is designed, and there's just so much redundancy built into this. And it's also decentralized. If there's a bad actor, they can't just go to one place. They'd have to go to thousands of places to interfere with the vote. And for that reason, you will not find anybody who runs an election operation that suggests that there is widespread fraud, whether they're Republicans, whether they're Democrats, Trump supporters, Harris supporters, anybody. The only people that suggest there is widespread fraud are pretty much people who don't understand how the system works.
Well, and you're not going to find disagreement from me or Scarlett, I imagine. But my good friend Eric Schatzker always tells me it's important to avoid the appearance of impropriety. Why wouldn't the Democrats agree to some form of voter ID? I mean, as it is, I'm ID'd if I go into a bar and order a beer, but I'm not ID'd if I go to a voting place. Why not just say, all right, you know what, as one element of your civic duty, of the responsibility on your shoulders, you need to get a photo ID from your state or federal government?
You know, this is another thing that I think is widely misunderstood. You cannot vote unless you have a social security number and it's verified, or a driver's license and it is verified. So, you know, in most of these states that have required photo IDs, you know, they're trying to get some security in place that they believe there's doubts. And there are people, especially now when you look at what's happened in North Carolina, many people have lost everything. Mm-hmm. So what did that state do? That state has even though they passed a voter ID law, they have had to make an exception for people who've lost everything. So, you know, but yet those people can't show up if they don't have a social security number. So there are protections in place, and that's why this idea of widespread fraud through voter ID, fraudulent voter IDs is really an exaggeration.
It may be an exaggeration, but that idea that people can walk in and say that they're Scarlett Fu or Matt Miller and not have to show ID does feed into the paranoia later on, or concern later on if certain candidates don't win the election, and it gives rise to people saying there was maybe some questionable activity there. I'm curious to hear from you, Mary Ellen, in terms of international meddling from players like Russia. So far, this has been mainly through misinformation, certainly in the 2016 election cycle, perhaps in the 2020, and even this time around in 2024, but less so actual at the polling sites themselves. Is that right?
So far, we have really only heard of one incident, and that is it wasn't even at a polling site. It was a viral TikTok video that claimed that Haitians were voting multiple times, non-citizens were voting in Georgia, and FBI was able to intercept that and determine that it was a Russian troll farm. The Georgia Secretary of State came out and disclaimed that, basically said this is not happening. And there is, it's my understanding that there is a lot of investigation that continues to go on. But yes, that is a fear. I mean, we watched it happen in 2016 in Florida, and there is the possibility of continued interference. I just hope that people have confidence that we've learned and that maybe the systems in place are enough to intercept what's actually happening.
And very quickly here, Mary Ellen, public confidence in elections is fairly low. Only 73% of voters were confident that elections would be run well. To what extent do you think that polling stations will need to become more like airports, where there's a whole security apparatus set up, metal detectors and everything else, so that people feel like, okay, this is actually a secure ID requirements. So this is a secure process.
Yeah, I mean, that is actually what started to happen. And as we heard from the Michigan officials, there definitely is an effort underway right now to make sure that there is secure and people are not just able to walk into these tabulation centers. Mm-hmm. And that has been a very expensive enterprise. According to the Brennan Center, I think, as you mentioned, 92% of all county officials have increased election security. Yeah. They're not only for voters and election workers, but their infrastructure. So that is underway, and we certainly hope it won't be tested. But I think we can be confident just by talking to the bipartisan number of officials I've heard from. Sure. That things are safe.
All right, Mary Ellen, really appreciate your joining us. Mary Ellen Klas, our Bloomberg Opinion columnist. Thank you so much. Now, still ahead, what investors need to watch for over the next 24 hours. We've got an election, folks. This is Bloomberg. right, let's look ahead to what else we're watching over the next 24 hours. There are some earnings. Restaurant Brands, QSR, which owns Tim Horton and Burger King, will be reporting, along with Young Brands, which is Pizza Hut, right?
Pizza the Hut and KFC.
And KFC, there you go. After the market close, Matt, we've got Supermicro.
Oh, Supermicro computer. That'll be very interesting, especially after the Ernst & Young resignation.
Yeah, we'll see if what they're able to say about that. And then we have some eco data in the morning, although it's not really market moving.
No, nothing compared to non-farm payrolls on Friday, which doesn't really seem to have changed how the market views the Fed.
All right, trade balance and ISM services. And by the way, we've got special coverage of the election starting at 5 p.m. tomorrow. In the meantime, Balance of Power's up next.